Good day, folks. I'm sitting on the rooftops of Zanzibar. You can see behind me, and I'm going to try and do my best, my very best. It's difficult conditions. It's really hot up here. There's a bit noisy downstairs, and I'm going to try and rush through it a little bit. It's tempting to rush through it because I don't want anything to go wrong. I've got a bag of Aru Buster coffee here. We're going to be talking about coffee in this video, about trading coffee. But we've just been to a coffee shop. I think Jesse will show you some B-roll of that before or during the video. But anyway, coffee is on the mind, and we've been to a coffee shop, and we are in Zanzibar. This is a coffee shop in
exactly.
Zanzibar.
Okay, so actually we have different kind of coffee. We have coffee from Mountain Kilimanjaro. We have caramel, we have nuts, we have sweet, so we have different varieties.
Okay.
I have medium roast, I have dark roast, so the choice is yours.
Okay.
And
it's become very expensive now.
No. But the price is the real price is $10.
Yeah.
But I mean, this store we sell wholesale. So
Okay.
I get only for $8. I have beans, I have ground.
Okay.
So karibu hakuna matata.
So these are grown at altitude. Don't suppose they're affected by international prices, but anyway, stay tuned
Which is 100%
for the rest of this video, and we'll talk about coffee.
No, you don't. Yeah.
And I'm going to try and record this video for you. So let's get going. We've got the euro, the pound, and the dollar yen on this chart, and my eyes are going to be a bit screwed up because of the sunlight up here. It's very, very bright, and I hope it all works. Now let's have a look at the dollar index. At first sight, it looks like the dollar is surging higher, which it is, but we've reached the top 200 period Bollinger Band and the top of this order block here, and a bit of a reversal candle on Friday. We had a tiny, more of a bullish candle, tiny little wick on the top, and then this hanging man candle on Friday. That was Thursday. Friday looks quite good at the top Bollinger Band. I'm looking for a pullback down towards this trend line. We've got a classic breakout. We need the pullback to follow, and if the dollar is to continue higher, it's probably going to need to pull back. You can see the levels which we might reach on a pullback. First of all, this actual breakout area of this downward sloping triangle top, and then we've got the triangle bottom down here, which is also a potential target, where the 20 period moving average is here on this day chart on the dollar index. I expect that this will pull back. So with the pullback on the dollar, we should see gains in the euro, the pound, and the yen against the dollar. And those pullbacks on the dollar index could take us down to 105.50 or 60, the top of the triangle, and the first Fibonacci retracement level, or even further down to the bottom of the triangle and the 20 period moving average. Maybe around about 105 to 104.50 or 60 or so. So we're currently around about 107, so that could be potentially 150 to 200 pip pullback, and so we can imagine what that might do to the euro. 150 pip gain, maybe a 200 pip gain, and on the pound and on the yen. Let's see where that could take us. So 150 pip pullback on the euro would take us up to about 107. That's around about here, and then the 100 period moving average and the order blocks are slightly above that. So 107.50 to 108, these swing lows here and the swing high here, and the 100 period moving average. The 200 period moving average is at this first order block, and that's around 108.30 to 40 to 50. And a similar sort of thing on the pound. Okay, that clearly didn't work, so let's start again. Going back to the pound, and bear with me folks, I'm doing this, I hope you appreciate it. I'm doing this in difficult circumstances. So there's the trend line on the pound. We've broken down through the short-term trend line, and we've now got to have a bounce. We've really oversold on the pound. We've seen where the dollar index should be going, and a 200 pip pullback on the pound from the current price at 2615 should take us up to 2815, up into this region here. Actually, we've got the 200-day moving average here, and we've got the swing low. So it's a really important area, and I think it's also a Fibonacci level. And I think we could get back up to there, and that's about 2860, 2850, call it 2820 or 2880, something like that. Please excuse the noise. We haven't quite reached this trend line at the bottom here, and I want to go into the 4-hour chart just to show you what that looks like and how far we might need to just reach down before bouncing back up again. There's that trend line below us. Let's go back like that. You can see we're trying to turn around. Let's just move this arrow. We took another long position there, forming a tiny spike low on this 4-hour chart. There's that trend line, and the current price is at 2625. The trend line is at 2580. So maybe another 30, 40, 50 pips below us before a bounce if we don't turn around here. We've had several attempts at this level. We'll see what happens next. But we are long on the pound, we're long on the euro, and we're short on the dollar yen. I'm going to move this one back to where it came. Let's have a look at the dollar yen. This one's already got going. So we're sort of moving into very good territory on this, although we're only just reaching towards the entry points for our last short positions. Let's zoom into this and see exactly what's going on. And even though we broke up through that upward trend line, the bottom of this channel, we only reached the top of the order block right up there into this conglomeration consolidation zone. Sharp drop down, big daily bearish engulfing candle. In fact, it's not only a bearish engulfing candle, but it's a dark cloud cover, having made a fractionally higher high compared to the previous candle. That was on Friday. So that's looking really good, and we hope for a continuation. Watch out for this trend line, the 20-period moving average down here at around 153, but we've already got a good start. We're at 154.30 right now, so I think we could go at least another 130 pips on the dollar yen. So that's currencies, and I'm pretty happy with it. That looks good on the day chart on the dollar yen, fantastic. We're just waiting for those bounces on the euro and on the pound. You can see the euro is actually trying a little bit here, and I once again do apologize for this very strange video, but I'm doing this because I wanted to update you on a couple of key things. Not so much the currencies, they're two reversal candles after a couple over there too. So I think we're in good shape on the currencies. Now let's have a look at stocks. Well, we've been short, as you can see, from those peaks up there on the NASDAQ and the S&P. In fact, we sold right at the top on both of these. However, we didn't get out right at the bottom. We got out near the 20-period moving average on the NASDAQ and a little shy of that on the S&P. So we got, I think, 70% of those moves down. We're now out of those altogether, waiting to see what Monday brings. We're short on NVIDIA. That's moved down nicely. IWM, fantastic move down. Tesla, we've now got maybe one small position still on that, not a big focal point. And then the German 40, we're also short on that. That hasn't moved down just quite as much as the others, but let's see what happens on Monday. We're short from quite a nice high point. Right, going into Bitcoin and Ethereum, 4-hour chart on Bitcoin still looks strong, holding up above these ranges, but there's the 20-period moving average on the 4-hour chart. Let's have a look on the day chart on Bitcoin. So holding up nicely there. We've got a big chunk of this trade. I mean, I've had one of the most fantastic trades in the last year, I suppose, and we've been long on Bitcoin from all of these levels down here. You can see all of our entry points. We've been adding consistently on all of these dips. We've now started taking profit near the top here. We've taken a little bit off, but not much. So let's hope this can carry on moving up. My target for Bitcoin is at least $100,000, probably 108, and maybe even quite a lot more than that. I don't know if that's going to happen on this first iteration, though. We'll see how we go. Same thing on Ethereum. We've taken a smallish long position on Ethereum. We'll see how we go on that. And then silver and platinum and palladium and gold, well, we're long on all of these. They've been a little bit disappointing. We've just taken a long position on gold around this level here. Let's go and have a look at the day chart on gold, and you can see why. And you can see we've reached the 50% Fibonacci. I had these lines drawn in days and days and days ago. In fact, I've just shifted them across slightly. That was always my first sort of level at attempting the long positions. And you can see we've actually had a reversal candle here on the day chart. So that looks good. We've taken a small long position on gold, allowing for a move down to the next trend line. We've broken down through the short-term trend line only to the 50% retracement level, allowing for the next trend line, the longer term and stronger trend line, and more relevant Fibonacci, you could sort of argue, the 618 fib, somewhere in this region here. We've had a go, small position, we'll see how we go on this. Notice that the 100-day moving averages here, but the 200 and this order block below that are still beckoning. Anyway, let's see how we go. We're willing to hedge or add, be very flexible on these trades. I don't think it's all cut and dried. It's not all go, 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 as you've seen from the stock markets. The Trump euphoria may be wearing off a little bit. The same sort of thing might happen with precious metals and Bitcoin. However, if the stock markets continue to drop off and we move out of risk assets like, NASDAQ and S&P and a whole bunch of stocks, we might move more into gold, Bitcoin, and perhaps even bonds. So we might see a shoring up of these metals. We're still long on palladium. It's been the bane of many people's trades, but doing exactly what we thought it would do. We've got this rounded bottom here, big smiley face. There are sort of reversal levels, and we've just reached the next bit into this order block, the bottom of this rounded base, and 2 reversal candles 2 days in a row. You could arguably say that's a 3 tri-candle bottom at this key level and into this order block. So we're still long on palladium. We added another small tranche here on this recent dip. We're also long on platinum. This doesn't look quite as convincing as palladium or as exciting. We've broken down through the smiley face bottom, but you could redraw this arguably, and we've broken down into this order block here. Same sort of thing. There's the channel that we broke out of. We've had the breakout, 2 pullbacks. We're on the 3rd pullback now. Allow for a 3rd pullback down to the breakout of this trend line or channel line that could take us all the way down to about 900 about 900, I suppose. We're currently at 941. So be a little bit flexible. These don't sort of go FOMO. Don't go all in on these. I was going to say something else, a bit rude, but I won't say it. Be very, very careful. Take small positions. Be willing to hedge. But I think overall these have got very positive and bullish potential in them going forward. Now let's go across to some of the energies. Uranium, we're still long. Very strange candle on Friday on URA and on UEC, but really just going nowhere. Big spike up, big spike down, and we closed where we opened. So it's a hesitation doji. It's not a reversal candle. Does not mean that we're going to go higher from here. We could equally as well go lower. Same thing on UEC. However, I do like this one better because it's an inverse hammer candle pattern. Perfect. And I expect that this will move up if this base holds here. We've got a 4 tweezer bottom candle pattern here. 1, 2, 3, 4 equal lows, and all bouncing off that level. It's a tweezer candle pattern, but 4 of them in a row. Normally there's just 2. With this big spike high, it's also an inverse hammer candle. So that looks good. I hope we're okay here with noise in the hotel. This is the Dow Palace Hotel. Fantastic, beautiful, traditional hotel. And if you're interested in what we're doing here in Zanzibar, I've got a travel channel. It's just a blog. It's nothing special or fancy, and it's called Wild Side Travel. You can go check it out. There is a link below in the description, I think, unless I removed it. And we're spending a couple of weeks, maybe a little longer in Zanzibar this time, and trying to do some work. Although we've had such a good trading run, I feel like taking 2 weeks entirely off. Can't do that though, because you need to know what's going on. Now, natural gas, we remain long. Fantastic bounces, both on the spot price, continuous price here at Pepperstone, and also the natural gas futures at Black Bull. Let's have a look at the futures. This is the easiest chart to understand. 200 period moving average. This is the day chart. Sorry, this is a 4-hour chart. There's the order block, 200 period moving average, back up through and closing above the 100 and the 50 period moving averages. Still need to get through the 20. Look at this pattern. We're still trading within this pattern despite that fake breakout through the bottom. And, well, that will have caused some jitters, I suppose, and stopped a few people out. But we've had that big move up and then a continuation of the move down again, but only as far as that order block and support, 200 period moving average. Let's look at this on the day chart. I'm trying to hurry up much as possible before the hotel gets incredibly annoyed with me. And there we've got this reversal candle. It's also the 20-day moving average, so it looks great on the futures here, and a nice bounce. I'm expecting this to go back up to the high. We've still got an uptrend. We've got higher lows, but we still haven't got higher highs, although we've sort of broken above this interim swing high here, moved up. We've got to get through these 2 and close above them to solidify and cement this upward trend. But I'm only looking to get up to about 3.5 to 3.8 to maybe 4.2, and then I'll be looking to sell natural gas going into this next period of time. If you think that natural gas always rallies in December, that's not the case. Even though we've got winter weather coming along, it doesn't always create a bull run in natural gas. All right, okay, we're short on WTI. That's self-explanatory. Nothing's really changed since my last update. There are all our short entries, and we still remain short on WTI. We took some profit on Friday. We'll see how we go next week. And then same with Brent crude. We're not trading Brent, we're trading WTI. We're going to get to coffee shortly. Just quickly on the Rand pairs, we're short on the South African Rand against the US dollar, or rather the other way around, US dollar against the South African Rand. And in fact, if the dollar starts to come off like I think it will overall, this will propel this trade downward too. We did reach the underside of the channel, and that's exactly my target, to go short. So we're there, and we're now short. We got there a little bit earlier than I expected. I thought we might take a little bit more time to get into this blob, but nevertheless, we've got there already. We've touched it and rejected perfectly off the underside of that channel line. Next target for this is the next channel, and the much broader channel target is down here. And that would take us down to about 16 rands to the US dollar. And we'd be trading the pound against the rand in sympathy with this trade, even though they'll move at slightly different rates depending on the dollar against the pound strength. But you can see the pound came off nicely against the rand as well. So we're short on that one, and I have my own personal short trade on this. I always have a trade on the rand because I bank in rands. So I sort of hedge my actual bank account with my trades. On the VIX, a little tick up yesterday. We got 2 long positions there. And as those stock markets came down, on Friday, like that, Thursday and Friday actually. The VIX has been a little delayed, but that should begin to tick up. And so we should play catch up on the VIX and start to move up into higher levels. My target on the VIX is back up to this sort of range here into the low 20s. We'll take some profit there and see what happens next. We're also long on TLT. There are 2 long positions, and I think we should see some relief in this market at some stage and begin to move higher. We are forming a very broad bottoming pattern here. This whole blob here is a big bottoming formation here on TLT. Let's see how we go next week, but I expect we'll get some strength back in there as well. And now let's go across to coffee and the others. I'm going to start with coffee because I think it's just really interesting that we happen to be in a coffee place. The coffee that we bought today, and I hope Jesse shows you some B-roll of it, comes from Kilimanjaro, and apparently the altitude is really good for coffee. And I've also bought a Robusta / Arabica blend, and I might even import some of it into South Africa or Europe. That's another story. This is my sort of idea on coffee, though. I know there are conflicting ideas and views on what coffee might do, but this is kind of it. I need to adjust the scale a little bit so you can see. We've got this channel that we're trading up within. We haven't reached the top or the bottom of the channel for quite some time, although we did reach it on earlier occasions in April this year, a long time ago. We've also got this rising trend line, which was a trend line. We broke down through it, and we've now traded underneath it for the rest of the period, and that's been since July. So we're now expecting a retest of the underside of this trend line, which will take us up into this blob up here. Let me see if I can just zoom in on that and show you what sort of price that is. And I expect once we get up into that region, we'll at least see some pullback from either that trend line or the top of the channel, and a move down to the center line of the channel, bounce up from there, and a resumption of the downtrend, or not really a downtrend, but to the bottom of the channel at the least, down to about 260 to 270. We're currently trading at about 250. So I think we could get up to around about 300, maybe 320 at the extreme, 350 and 320, and then a move down. At least just a small pullback, which will give you the time to either take a small profit or to move your stop to break even, to hedge it, whatever you want to do, depending on the position that you may or may not be in at the moment. I'm personally not in any coffee positions at the moment, but I'll be considering a short trade at those levels. Let's reset this price scale. So that's coffee. And then cocoa, well, we've hedged cocoa again. This is quite a complex trade, but it's going pretty well. So we sold there, we immediately hedged. We took profit on the hedge up here, and we sold some more. Then it moved higher. We immediately hedged the whole lot, locking in some of the profit from the previous hedges. And we now equally hedged, looking for a move up to this line over here. This is the top sloping touch line, if you will, of what looks like it could turn out to be, interestingly, a megaphone pattern here at the top of this range. Now, something like that, it's difficult to see because we've got lines going everywhere now, but I'm talking about these 2 lines. That one that's highlighted there, this one that's highlighted there. That's forming a megaphone pattern. The top of the megaphone's there. The bottom of the megaphone, if we do get there eventually, will be down somewhere down here, and possibly the meeting point, the apex of those 2 lines at around about 6,000 and something and some change. So move down from there. We'll unhedge again, take profits on the long hedges, which are now double what they were previously, and probably add to that position. I've still got plenty of space. These are not huge positions, but I'm working my way into an advantageous position here. Target for cocoa, somewhere down here, as I said, into this apex. Target for cocoa, as I said, somewhere down here into this apex, this long-term trend line, and the bottom of this channel, and also the bottom of this expanding, broadening megaphone pattern. So that's cocoa, and it's a tricky trade, but I think it's okay, and it's an interesting one, and we'll see how we go on that. And I'll try and update in more detail when I have some office space, not today. We're also long on sugar. That's just faffing around. We're long on soya. Nothing's really changed on most of these trades since last time. We're also long on cotton, now having taken another position down at the bottom of this range. We're trading up and down above this horizontal line, and we've reached the bottom of the range and the bottom of a very, very long-term drop on the price of cotton. The cotton farmers will be loving a big rally on this. We're down at 65 cents. We need to get up to somewhere, I suppose, around about 100 to keep the cotton farmers happy. I know quite a lot of them, and I know sugar farmers too. So they'll all be looking for a bit of a pickup in these positions. A lot of them are hedged, of course, and as you'll see from the COT report, there's a lot of hedging that goes on from producers and merchants with all these commodities, and if the price is dropping, they are protected through their hedging positions, but at some stage they'd love for this to move higher and for them to be able to harvest and take some profits on their actual crops rather than protecting themselves with hedges. So we're long on wheat. Wheat's also the same sort of thing, just dropping back. We've got a position from there, position from there. We're short on orange juice. There's our short position there on orange juice, moving sideways now since September. Sugar, we've got a long position right there. I think this is forming a bull flag. We could see some strength in sugar and also in soya, right at the bottom of a long-term downtrend. The reason I think that all of these are going to pick up is because we are at the bottom of the long-term ranges, but also I think we could see some dollar weakness in the days and weeks and even months that lie ahead. Dollar weakness will drive the price of commodities higher. And that's it, folks. So I hope you enjoyed this rather strange video. I hope you enjoy some of the views of Zanzibar, which you saw up there on the roof. I couldn't say the computer was overheating. I couldn't see the screen. I was starting to sweat, so I came down here into sort of the bar area. It's really a reception, sports lounge area. Have a great trading day. I'll speak to you on Monday again, and good luck. It's been a great trading week and month, and I hope it carries on.
Not gas kings, we trade for grace. It'll make us smile, lights up the place. Market swing, but we hold our base. Double bottom strong, we're in the chase.